Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Nvidia Corporation, stock ticker NVDA. So as we can see here, this heavy trading condition continues. This has really been in place since the July 11th trading period. We really haven't seen much of a relief rally since these initial declines started to occur. Most recently, what we've seen here would be a price low, which came in at, let's get an exact number here, 106.30. This was a spike below the 107 mark that we've been kind of mentioning in the comments for the last couple weeks, and we have now reached this target. Currently, prices are looking quite heavy because we have not been able to break above this exponential moving average cluster. If we kind of drill in here, we can really see that price failures are really starting to occur right as we're moving into these exponential moving averages. After we saw the initial declines, we did see a bit of a relief rally here. I mean, if there has been any relief rally, it would have to be this price move here. And we can see that prices kind of moved into highs of 124.70, roughly just below there. So that is below the 125 mark, but it's also more significantly, it's a price failure right at the 100-hour exponential moving average, which is the declining purple line that we see here. So, overall, the share price itself has not been able to break above this exponential moving average cluster. And this is a negative because currently prices are facing in the downward direction, which essentially means that share prices are going to start to encounter resistance levels at lower and lower levels. It would just be harder for the stock to gain traction as long as that type of condition is occurring. So, in addition to that, we're also seeing, several moving average crossovers here. Initially, this started to happen. We can call this July 16, as this yellow line here starts to cross below the orange line. So this is the 20-hour exponential moving average, the yellow line, crossing below the orange line, which is the 50-hour exponential moving average. And then it's really just a major decline from there, as we can see. The yellow line crosses below the purple line, and then finally this blue line here, which was sort of flatlining at the moment. As that occurred, we're now currently sort of facing in the downward direction here. This blue line is the 200-hour exponential moving average. So, the same type of activity started to occur with this orange line. We fell through the 100 period and the 200 period exponential moving averages, and now finally, we're getting kind of the major crossover here, which is the 100 period EMA is now crossing below the 200 period EMA. So that's sort of the final crossover that we would be watching for, and it is on the verge of occurring. We're not quite there yet, so it's possible that it will not happen. But overall, everything is pointed in the downward direction, and there really doesn't seem to be much supporting prices at current levels. I mean, we would really need to see a fairly strong rally in share prices in order to prevent this crossover from happening. So currently, there's a lot of negative information here, and then in addition to that, we can see that we've broken through some very significant historical support zones particularly 117.70 was a major level to the downside. And then, as you can see here, we're now starting to move through significant Fibonacci retracement levels as well. So, in order to define this price move, we're sort of looking at this would be the lows from the middle of April, which came in at roughly just above $75. And then, of course, these ultimate highs here, which posted at 140.76 during the June 20 trading session. So if we're using this as our dominant trend move here, I'm still viewing this as the most influential trend move for the stock. So if we're viewing this as the most important trend move here, we can see that currently we are starting to break through the 50% retracement of this move. That level came in just below 108, as we can see here, and this does fairly closely align with this 107 level that I've been pointing out for quite some time, which came in back here. This would be more of a historical support zone rather than a Fibonacci level, but I was pointing this out because it did come into very close contact with this 50% retracement level. So, currently, the major level now to watch to the downside comes in at $100.30. So just above the $100 mark. This is arguably the most important Fibonacci retracement level. I would say that it is, in my view. Because the entire Fibonacci sequence is based on this on this percentage. This is a very, very important level. And then in addition to that, you have the fact that it's also probably the most major psychological level as well, which is the $100 mark. So, you can be very confident that, if we were to see a clear break below this $100 level in Nvidia, that would be no question about it. That would be the main market news story of the day. Nvidia falls below 100. There would be no question about that. Given the trajectory and the speed with which this stock has rallied for most of this year, declines like this are going to start to take many people by surprise, and people are going to notice, and the financial news media is going to notice as well. So, this is a very significant level to watch on the downside. Also because, I'll try to zoom in here a bit. It's in a strange area here, but this $100 level is sort of protecting this price gap here, which was also seen during a prior trading session. So, if we were to break below, roughly 101.50, we're definitely going to start to see some selling pressure here, because the expectation would be that this gap would need to be filled. This gap would not be filled until we see, let's get a high here from this trading period. The high came in at 94.96 during the May 22nd, May 22 trading session. So, there is a fairly significant price gap here that would also need to be filled. I would expect to see buyers start to emerge in defense of this $100 mark. You're also probably going to start to see options trading defenses sort of kick in at that point. So I would expect to see at least a bit of a bounce there. But for the moment, the next Fibonacci retracement level to watch to the downside does come in at this $100 level. And there really isn't any other historical support in this region to sort of keep prices elevated and to prevent further selling pressure. So here's the current market analysis for Nvidia Corporation, stock ticker NVDA.